Good morning. It is just after 10 UTC. No major changes from yesterday outside of some crazy volatility that we caught at the New York Open there. Looking at the localized structure based off liquidity, yeah, the stuff above us at the highs, 60.7, it's pretty thick. Actually got a pretty good ramp up. If we do start squeezing to the upside, watch for that break to gain and then go. The trigger for me started to look at gains at 60K, more significant gains, to then have that break to the upside. However, until that happens, I would argue that the local range structure you care about is 60K at the top side and then 58.2, 58.3 to the bottom side. Long shorts are also building, which we'll go through in a sec. The higher time frame liquidity looks fine. We're getting close to a pretty big major break here. If you do have shorts from the high structures still, I think that's good. If you have hedged some longs from previous ones, I think that's good as well. For opening new orders right here in the middle, it's a bit of a coin toss, I think. I don't think there's a lot of good directional trending or general data. So right now, just kind of waiting for the break of the structure, which is, yeah, we're basically at a squeeze, waiting to find a direction. And we're getting towards the end of it, expecting it to start moving probably in 2.5 hours when we start getting some big economic data releases, which we'll go through. Just quickly looking at long short ratios, like for Binance as an example, getting closer to 2 to 1 long to short, which it's been kind of the trend since, over the weekend and last week, sort of going from 50-50, 1 to 1 long short ratios, seeing a lot more longs coming in as well. And then on the higher time frame for volume in general, obviously major spike in the volume that came in yesterday during the opening hours of the New York Stock Exchange. Now we're seeing it kind of a dead zone as everyone's kind of waiting. And the big thing here too is that if you're looking at the basis is basically saying that the perpetual tickers are trading negatively compared to the spot tickers. So people are still kind of angling downish. In any case, the big stuff now is looking at the economic events also that are going to be playing out today. Like I said, about 2 hours and 25 minutes ish. PPI data and CPI data is coming in today and tomorrow, especially with a lot more data coming in tomorrow. That's going to be very important, I think, with the first kind of major event with PPI data. Generally, with PPI and CPI, higher than expected from the forecast is expected to be bullish for the U.S. dollar, and therein potentially negative for asset markets. Conversely, if you look at like initial jobless claims, higher than expected from the forecast is seen as negative or bearish for the US dollar and potentially positive for the asset market, like TradFi and crypto and stuff going up. And the big changes here, if you're looking at this type of stuff, is very simple. The market tries to price in the forecast as much as possible. It's if there's deviations, so the actual numbers that come in are different from the forecast, you should see an increase in volatility around those times. But yeah, with that, we'll look at trading light. So looking at trading light, no major stuff. There were some orders that came in yesterday, a couple big blocks to hold price and push price back down after we had that, bad low close on the 1 hour with no bearish retest, instantly broke to new highs. It's just massive liquidity grabs to both sides here. Like I said, not super interested until we can get some sustained price action above 60K or start losing 58.1, 58.2 right now to the downside, breaking these lows, which would open up some liquidity to the downside. Looking at the TPO real quick, just value areas. Yeah, we're coming back down to the lows that we did yesterday. I would expect, like I said, not a whole lot to go on with this. If we do start breaking the lows and bearish retesting some of these value areas, creating new lows especially, we would definitely target lower into the 55K zone, which I think is still kind of the plan in general if there's a breakdown. But for right now, all we've really done is we did some massive expansions going into the end of last week, followed by ranging sideways and then a breakdown. So we've lost a little bit and we're just filling out the volume in this range. So again, set alerts to 58.1 and then set alerts at like 60K. Whichever side we start breaking out of and actually can sustain support in that direction, or resistance, then that is the direction of travel. Just be aware of fake outs in this zone as well. Looking at the footprint overall, let me look a little bit higher because it's always rough there. So again, with all of these guys, like massive amounts coming in, obviously on that huge 4 hour candle, all it is massive liquidity grabs, rotations of of capital and liquidity. So for me, I'm not too super interested until we start closing below some of these wick structures to the downside. It looks a little bit rough here, but all we really need to do to gain is like 60K, preferably 60.1, gain those 4-hour high block structures that we saw there. So that's mostly all these shorts from yesterday are still in place, as is the stuff from the weekend. Most of the shorts are still in place from the weekend structure. There was quite a bit of liquidity grabbing in before we started dumping, but it's still mostly in place. Finally, looking over at trading view, general plan, no major changes from today. You're basically stuck in this kind of sideways move. The major gains that really matter, 61.3, 61.4. This is still end of week targets. I'm completely ambiguous in the zone. I could care less. I want sustained price action underneath 58.3 to lose and then go back to 56.7. There's like the first kind of chink in the armor where there's a potential step off from that. If that's lost completely, you are targeting 55K, and that should be the level to hold. If we lose that, we are flushing all the way down to the lows to 51.7, 51.3, etc. But with that, we are technically still trending a little bit to the upside. We have had the first major breakdown of structure here, right? Losing lows and bearish backtesting stuff. Like that's a very clear bearish backtest. For me, anything that looks interesting, if we do start squeezing to the upside, there is that potential, especially if we sustain above 60K, that we play out a very similar pattern to what we saw play out last week, where we have, pretty hard squeeze to the upside. And then that might just continue up until the next major resistance, which should be around about August, with July Q3 already being tested. So just keep an eye on that as well. I'm just waiting. I've got alert setting, waiting for basically a direction. To hedge off some of the longs, we took some shorts from the failures, which we talked about on Friday. But for the time being, almost ambiguously uninterested on anything higher time frame, 1 hour, 4 hour plus. If you're trading this, you're in a range, it's nasty, and I highly recommend people just kind of like wait for an actual break to either side. And because at this point it can go either way, we've got enough liquidity to either side. I'm wait for the triggers. Last thing, just watch out for liquidity grabs. Liquidity grabs are nasty, and we saw one play out perfectly here over the weekend, right? We broke down, right? We were creating new lows, creating new lows, creating new lows, had to move back up. And then finally, we had one last big liquidity grab before sending and then failing to the downside really bad. So this right here is a pretty nasty liquidity grab. Watch out for that. If we break that in this zone, that would probably be something like, this, straight up candle that then closes bearishly compared to previous price action. Those fake outs are very common before there's an actual true breakout. So my suggestion here would just be assume it's a fake out till it's a breakout. And that's that. So have a good one. Take it easy. Catch you tomorrow.